I'm going to show you how I use the infinite banking concept to purchase multifamily real estate. If you want more examples, click the subscribe button. All right, so I have this beautiful cash value life insurance policy. It started a little slow in the first year and then started compounding tax-free for the rest of my life. And I grew up a fairly significant amount of cash there. And I had an amazing opportunity to purchase a portion of a multifamily. I'm a passive investor. I like being a limited partner. So I borrowed $200,000 of the insurance company's money. My money stayed in the policy, continuing to grow tax-free. So that loan did not affect my growth whatsoever. I still have the money in the policy, and I still have a death benefit, and I'm borrowing $200,000 of the insurance company's money to do the multifamily. I paid 6.5% interest on that. So that was $13,000 the first year. Now, when you take a loan to borrow, to invest, to try to produce an income or a return, that interest is tax deductible. So this $13,000 was tax deductible. So assuming a 50% tax bracket, it actually cost me about $6,500. So this 39 unit that I bought a percentage of, I put my $200,000 in, and their plan was in 24 months to increase the rents, do some renovations, bring up the value of the property, and then give me my money back. Okay? It actually worked out better than I anticipated. After 18 months, they came back and said, here's your $200,000 back, but you still own the same percentage in this building, and we're going to start paying you some cash flow on that now. So let's look at those numbers. So this was for 1 year, $13,000. I was like 17, 18 months. So it was roughly 1.5 years. So it cost me about $18,000 less tax. $9,000 was my out of pocket for those 18 months. However, now that's producing a cash flow of roughly $10,000 per year, plus I still have the equity ownership. That $200,000 investment is still worth more than $200,000 now. And someday down the road, I'm going to be able to sell that, or we sell the building or whatever. So I'm going to have a windfall down the road, or another refinance opportunity. Maybe in 5 years, we can refinance, draw another $200,000 out. But I'm going to have an income stream for the rest of my life and equity. Okay. But when I paid that money back to the insurance company, I didn't leave it there. Financial velocity, you got to keep your money working for you. So I had another multifamily. This one was actually, okay, first one. The second one was a student rental. And again, I was a passive investor. I'm not the GP, I'm general partner on this. I am a passive investor. So I bought a percentage of it. Same investment was $200,000. That investment's paying me a return day one of cash flow of 3.5%. So that's going to be $7,000 a year net. It's coming back as return of capital, so I'm not going to pay any tax on that. So each year, I'm going to pay that $13,000 in interest less tax savings, assuming a 50% tax bracket. So it cost me $6,500 a year in interest, and I'm making $7,000 a year. So let's just call that a wash. So really, it's not costing me anything now, okay? The plan on this strategy is they're going to refinance somewhere at 3-4 years is the plan. That $200,000 will come back to me completely tax-free, okay? So now I've repaid my policy loan. And the cash flow on this, when they repay the loan, they expect it to be roughly 5%. So I'm going to get $10,000 a year on this multifamily investment for the rest of my life. I have no outstanding loan now against my insurance policy, so my money's up here. Plus, I have my money here, taking advantage of this first multifamily, producing $10,000 a year. Plus, I still have the equity. Plus, I have another $200,000 in the student rental that's going to be producing a $10,000 income. And I still have my cash value that I'm going to have tax-free income in retirement. So the idea of this infinite banking strategy is to use the loans over and over again. I like it for investment opportunities. So let's say down the road I have 5 of these or 10 of these. I'm going to hit retirement and I'm going to say, great, I have $10,000 times 5 or 10 plus millions of dollars of equity in these positions that I can now leverage or I can sell, I can access somehow to make more money in retirement. Plus, my policy grew exactly the same as if I didn't do these 10 deals. So that's the power of the infinite banking concept is you can grow your money for a tax-free retirement inside your policy and then do additional deals that don't affect your policy because you're never borrowing from your cash value, you're borrowing against your cash value. So now when I hit retirement, I am going to have cash value that I can use in retirement. These loans I take tax-free. I'm going to have these sources of income plus the equity. I am going to have a much larger retirement and I think a much safer retirement because all the time my money was in the policy, I'm protected against market fluctuations, changes in interest rates, market crashes. I'm protected against longevity because if I live a long time, this is going to grow to a massive amount. And it's going to come with this big death benefit that's going to allow me to spend my other money differently. Look for permission slip video from us. This is going to allow me to have a much better retirement and a much safer saving strategy. It's what the wealthy people are doing. It's what a lot of Canadians are doing, and it's what you should learn more about.